these are the problems, problem number 1, problem number 2, and problem number 3 that I am going to cover in this video, or possibly 2 videos. My guess is 2 videos. And then there are some workbook pages. Now, these look very, very similar to the workbook pages and homework that you have now, but this is not the same edition as the textbook. This video is to give you a demonstration of these problems so then you can apply that knowledge on your own. The point of this video is not to tell you step by step how to do your exact homework. So you have workbook pages. I am going to actually use the Excel templates that are provided by the publisher so that I can keep all the numbers straight and add and subtract things pretty quickly in Excel. So the first problem that we are going to tackle is this number 1, and it is exercise 1A1. So the number 1 right here corresponds with the workbook page, number 1 down here. Okay, so this is the Excel version of the workbook, but you are just going to write this out on the lines for exercise 1A1. So go ahead and take a few moments, pause the video if you need to, and copy down these numbers. In accounting, we have 3 types of accounts, categories. We have assets, we have liabilities, and we have owner's equity. So in accounting, we have lots and lots and lots of different accounts. So for instance, cash. Cash is an account. Every business wants to have cash. Well, cash is a type of an asset. It has value to us. Most businesses also owe money to someone, and that is called a liability. That is just money we owe to someone else. Owner's equity is whatever is left over. The basic accounting equation is assets equals liabilities plus owner's equity. We must keep this this equation in balance at all times. At all times. There is never an exception to this equation being out of balance. So if I'm to keep this equation in balance, I have assets and liabilities and owner's equity. I would have to take 27,000, subtract 18,000, and I would get $9,000. That would mean that my equation is in balance. Now the next one, I then have to add these together because again, I must keep this equation in balance at all times. There is never an exception to that rule. It's one of the reasons I love accounting. In this particular problem, I then need to keep this last one. I have my assets of 35,000. I have my liabilities of 10,000. So my owner's equity must be 25,000. So that is a very short demonstration on how to keep the basic accounting equation in balance. I am now going to move on to problem 2. So I'm going to pull this back up, and number 2 up here says, record the following transaction in the expanded accounting equation. So we just talked about the basic accounting equation, which was listed right up here, the assets, liabilities, and owner's equity. Well, assets is a category, but now we have several different types of assets. So in this problem, we have cash, and we have accounts receivable, and we have computer equipment. All of those things have value to us. So therefore, they're an asset. Here we have accounts payable. Accounts payable is the account that we use to keep track of money we owe someone else. We're going to pay it to them. And then owner's equity. Owner's equity is split out to capital. Capital is how much money you put in the business. Withdrawals, how much money did you take out of the business? Revenue and expenses is part of owner's equity. Revenue, how much money came in. Expenses, how much money went out. So although now we have several different several different accounts listed out here, it still goes back to this same equation of assets equals liabilities plus owner's equity. Now let's look at the problem and see what that means. Okay, now that we have some transactions and we have the expanded accounting equation all written out in your workbook. We can follow along, and the instructions for the problem said record the following transaction in the expanded accounting equation. Transaction A. Transaction A said Baker invested $90,000 in a computer company. Baker invested $90,000 in a computer company. So when we are doing accounting, every transaction affects two accounts. Every transaction affects two accounts. So in this particular example, Baker invested $20,000 cash. So our cash has to go up. But also, we have to keep this equation in balance at all times. Assets equals liabilities plus owner's equity. Well, we keep track of investments by the owner, money that they have put into the business in capital. So right now, my account is still in balance. Transaction B, bought computer equipment on account. Bought computer equipment on account. Well, computer equipment is going to be our first account. And then we keep track of how much we owe other people in accounts payable. And how we know that we didn't pay cash for that is the word on account means that we have agreed to pay them later. So I have something on both sides of the equal sign. So if I were to add all these up and straight down, all of it would still add up. C, Baker paid personal telephone bill from company checkbook of $50. Company checkbook of $50. So my cash account is going down. And in accounting, we don't typically use minus signs. They're hard to keep track of, and so we typically use parentheses to mean subtraction. Okay, so we've got it on this side of the equation. Now we got to figure out where it goes over here. Well, we keep track of money that individuals have taken out of the business by in the withdrawals account. In the withdrawals account. And right here, we don't put a negative sign in front of the withdrawals. We have additional withdrawals. We have more draws, so there is no negative sign that goes there. Next transaction is transaction D, received cash for services rendered. Received cash for services rendered. So that means our cash is going up. But it also, for services rendered, that's revenue. That's the amount of money that's coming into us. E, billed customer for services rendered for the month. So in this class, we are learning something called accrual-based accounting, meaning that we count revenue when it is earned, not when it is deposited. So the minute we have performed the service for the customer and they owe us the money, we count that as revenue. So this customer, we billed them for $29,000, but because we are doing what's called accrual-based accounting, then we include it as revenue. But then they said we billed them. That means they didn't pay us cash. And we keep track of where customers owe us money in an account called accounts receivable, because we are going to receive money from that customer. Next transaction, paid current rent expense. Paid. That means my cash is going down. That means my cash is going down. So again, I must keep this in balance. Absolutely must keep it in balance. So I have an expense. I have rent expense. I do not put a negative over here because there's a subtraction sign right up here. And right here, the account balance is going up. I have more expenses. I have additional expenses. So no, our expenses overall are not going down. Our net income is going down, but our expenses overall are not going down. G, paid supplies expense of $1,510. Paid. So two accounts have to be affected. One of them is cash, and the other one is going to be an expense. Eventually, we'll list out all the expense accounts separately. For right now, they're just all bunched together. I'm now going to go through and add up these columns straight down. Maybe I will. Okay, so here's what I did. I totaled all of these straight down. And I want you to just pay attention to the numbers that are right above here. Okay, so I took 90 minus 50 plus 13,700 minus 42 minus 1,500, and I got 97. And I did that for every column. And then I went through and I brought down the plus signs and the minus signs and all of that. I brought them down straight across. I then went through and I did the math. And so over here on this side of the equal sign, I got 137,140. And over here, I added and subtracted all of this like I was supposed to, and I got 137,140. Voila, we're magic. That is because in accounting, it's called double entry accounting. Every transaction that we have affects two accounts. And when we put it on this worksheet, that's how we accounted for them. Now, mind you, this is just how we teach basic accounting. This is not what we'll keep doing all semester, but this is a really great place to start. We have one more problem that I am going to cover, and that is problem 3. Problem 3, and it says, from the following account balances, prepare in proper form for September an income statement, a statement of owner's equity, and a balance sheet. And this is right here. And then if you'll scroll down, you're going to need this entire page for this problem. And I'm actually going to now pause this and go to a separate video so that these videos do not get too long. Hold tight. Thank you very much.